So coming back to the question, equity beta is 1.35, which is nothing but the levered beta. Okay. Then the market values are, I have just given this here. Okay. Equity beta is 1.35. Equity is 1850 crores, the competitor. Okay. And debt is 510 crores. So if you calculate, the debt is 27% of the total capital. Okay. Then we have the the Nepal tax rate is 20%. So that means 20%. So 1 minus T will be 80%. Is that okay? Fine. So now what we do is basically, so this information is available. And this is what a levered beta. Okay. Now what we have to do is we have to calculate the first, ultimately we have to arrive at the equity beta of the new project. Our main aim is to calculate what should be the equity beta of the new project, which is not given. Okay. But we are given the equity beta of the competitor. Okay. So what we'll do, first we are going to unlever the beta. Okay. And calculate the asset beta. The asset means the water park. Okay. Without any debt component, if the company is running the show, what should be the beta of that asset? So each asset. Now I told you beta is dependent on three things. Okay. What are those three things? Type of business, financial leverage, and operating. Okay. Now the financial leverage is your debt part. Okay. So we have the operating leverage and the type of business. If we combine them, it is called unlevered beta. So unlevered beta depends upon what kind of business you are doing and how much is your fixed cost versus variable cost ratio. Okay, so that is called the asset beta. Now we are given the equity beta, which includes the debt part also. So we are going to exclude the debt part and calculate what is the unlevered beta. Okay. So the formula is unlever the competitor's beta, which is the levered beta is equal to unlevered beta into 1 bracket 1 plus 1 minus tax rate into debt upon equity. This formula you are aware of? Okay, very good. So that means again, if you write the formula there, so unlevered beta, we have to calculate first the unlevered beta and apply the debt equity ratio of the competitor or sorry of the project and recalculate the levered beta. So which will be, I just calculated that. So it is like this, 1.35 is the equity beta divided by 1 plus 0.8, 510 divided by 1850, which comes to 1.106. So there also I have calculated. Okay. So go through this calculation. So how it has been done? So I just put a word 1 here, okay, because 1 we need to add. Then 80% is 1 minus T. Then debt equity ratio, debt is 0.27, which I have calculated here. Okay. So I have put the number here. Okay. Fine. So, and then 0.22 will be basically nothing but, so multiplication. Okay. 80% of 0.27. Okay. Fine. The 1 minus tax rate into debt upon equity. That's what I am doing. Okay. So then we have, 0.22 आ गया. अब मैंने इसमें 1 ऐड कर लिया. Okay. And then I did the division. That means levered beta divided by this number, which is the equity beta divided by this number. So I get the beta as 1.106. Now to understand, the levered beta was how much? 1.35 of the competitor. And unlevered beta, that means the asset beta should be low because the company is using debt. So we have got 1.1. So have a check that whatever answer you get, if you unlever it, the beta will get reduced. Okay. It was earlier 1.35. Now it is 1.10. Is that clear to everyone? Just have a look on your Excel sheet and see how it has been calculated. Is it clear? Any question out here? Just look at the formula and just try to see that everything is in order. Okay. I have used this formula and then I have shown how it has been calculated here. Exactly. We have just put the numbers and calculated. Is that okay? Okay. Then relever the project relever the beta for project capital structure. because now this company is going to have a different capital structure. So we know what is asset beta. So now we are going to calculate the equity beta or the levered beta for the new project. So we know that if you see the formula here, so it is using 45% of debt and 35% of equity. Sorry, 55% equity.
So debt equity ratio is different.
So this is given the question.
Debt equity ratio is different. That is why we calculate it.
Debt equity ratio is different. The new project they are going to deploy. That's why old company had its own ratio. So there they were using less of debt and more of equity. Okay. Now this company will be using more of debt and less of equity. So that means that ultimately we will get the levered beta more than the competitor. Okay, because it is going to use more. How much it is using? 80.81% is debt. There it was only 0.2. Okay, fine. So that's why the project beta is 1.83. Okay. So just have a concept clarity that the levered beta of the project will be always more than the competitor, because the competitor is using was 27% of the debt, whereas this guy is using 81% as debt. More of debt, less of equity. Okay. So the process is, again I'm going to explain. First, we were given the beta, the equity beta or the levered beta of the competitor. Okay. Now, the levered beta means what? The type of business plus the operating leverage. The levered beta is nothing. Unlevered beta is nothing but the type of business and the operating leverage. Now here, what was given to us was equity beta, which means it also includes the debt. We are going to exclude the debt component of that and calculate the water project beta, which is an asset beta. The beta of the water part. Okay. So we have minus the debt and calculated the beta, it came less 1.1 or 1.08. Okay. Now what is our job? We are going to relever the project capital structure, that is 55% equity and 45% debt. So debt is 45%, equity is 55%. So debt is 81%. So 1 minus T is 80%. So debt upon equity 1 minus T will be 0.655, and then we add 1 to it, and then we do the calculation to calculate the levered beta, okay, which is the multiplication of 1.10 into 1.655. Okay, so we have the beta as 1.83. Is that okay? Why the beta of the new project is higher compared to the competitors? Answer me this. Answer me this question. Okay. आपकी क्लास प्रेजेंटेशन मार्क्स 0 हो जाएंगे आपका। डेट हाई है ये देखिए किसका कंपनी का डेट हाई है ले वाले का डेट हाई है इट्स 1.8। ये मैं बता रहा हूँ, अगर आप क्वेश्चन बैठो करने एग्जाम में तो आपको जो बिना आएगा वो compared to the competitors, because the competitor is using only 25% debt. The total capital structure 27% से debt का, अब ये करीब 80% debt यूज कर, तो the financial leverage will put up the beta of the project. The project will become more risky, isn't it? Okay.
Projects you said we don't consider which capital structure.
हाँ, हमने क्या करते हैं? This needs to be again. Now it is going to explain. So हमने पहले क्या करा था? We look at which beta of which company, the competitor or the project? Competitor. So competitor beta was low compared to the project. Why so? डेट क्या है? कम है ज्यादा है? ज्यादा तो पता है कड़ा दूर बताओ ना. Why you are feeling so shy about it? Then you know the answer. Okay, because the new company which is going to establish its business in Nepal, there they are using more, deploying more debt, which means the beta will go up, because the beta is combination of three things. What are those three things? Number one, type of business. What kind of business you are doing will determine the beta of the company. Okay. If the company is making discretionary products, the beta will be high or low. If the company is manufacturing cars, which is a discretionary product, the beta will be high or low. Beta will be high. If the company is making medicines, which is a consumer staple, the beta will be high or low? Low. Okay. So it depends on what kind of business you are. Number one. Second is called the leverage. Now leverage is broken into two. Okay. Now the first one is what? Operating leverage, which means the structure of the cost structure of the company. How much fixed assets, how much is the fixed cost, and how much is the variable cost. Okay. If the company is having more fixed cost compared to the variable cost, will be the beta will be high or low? High. Okay. If the company has high variable cost and low fixed cost, the beta will be high or low? Huh? It will be low. Okay, I'll just give you an example, and you will always remember that. My son started doing a business about 5 years back. Okay, so it was like a water park. So it was a kind of a fun box. You can just go and Google. There's a fun box. Just go and to the Google and say fun box. You will get a business there. And there are many now there's so many businesses like that. Okay, so they hired a place, and they were paying 6 lakh rupees rent for that place. 40,000 square feet, 4 stories. Each story they had put some children plays other things where the children will celebrate their birthdays, will go and play into those play zones, and there's so many things now there. Everywhere you will find them. Okay? That time they were the pioneers. They started about 10 years back. Their partners, and then now it has become so competitive that it is not giving any money to these businesses, because every you can corner these businesses at the end. So they paid 6 lakh rupees of rent. They hired people, the nannies and staff, 3 lakh rupees. Okay, some 30 people who are going to look after the children. बच्चे आ रहे हैं उनका बर्थडे हो रहा है तो 3 लाख रुपए का खर्चा जो था that was the salaries. So how much? 9 lakh rupees this. Another 1 lakh of electricity and other things. So 10 lakh was fixed expenditure. Virtually no variable cost. If there was a variable cost because they were giving food and all, so just exclude that. So if they were doing a say turnover every month of 8 lakhs, they were making a 2 lakh rupees loss. When they started, in the first year, in the first month, they made a total revenue of 7 lakhs. But the expenditure was how much? 10 lakhs. Second year, they made 9 lakhs of revenue. They still lost 1 lakh. In the third year, in the third month, they made a 10 lakhs of revenue. They were breaking. In the fourth month, they made 11 lakhs of business. So they earned 1 lakh. So the extra 1 lakh which they generated actually gone to the profit. Because it's a highly operating level business, so each additional money over the fixed cost was added to the profit. 100% to the profit. Okay. If it comes down by 1 lakh, they lose 1 lakh profit. So that means such kind of businesses which have a high fixed cost versus the variable cost will have a high operating level, and the business will become very, very risky. So, then they started doing business. They were making 20 lakhs, 25 lakh rupees of kind of per month sales. Till that time, very good. But then the time came that the COVID was over and people started establishing, running their businesses. Here the business both. And they found that turnover started dropping because there was a lot of competition. From the peak sales of 25 lakhs, and they are earning about 5 lakh rupees. Sorry, 25 lakhs. 25 minus 10. 15 lakh. There were 3 partners, they were having 5 lakhs. So my son was very happy. कुछ ना करके घर बैठे 5 lakh कमा लेता था. He used to never go and do the business. He used to, overnight जाके मूवी देखना और सुबह से 11-12 से उठना और फिर जाना था और 1 घंटे के वापस आना. And every month he was getting 5 lakhs. It's like a dream business. So I thought it was of course he did his law, but he initially thought of joining a law firm, but नहीं बात बनी उसकी. So he started doing this business and he was doing great. करीब 3 साल तक तो ऐसा चला, खूब पैसा कमाना. उसके बाद sales down होने शुरू हुए, and the sales crashed to 5 lakh. And then they decided they're going to close this business because they can't manage it. They didn't, they took some money from their pocket to run for about 3 to 4 months, and they closed. Now, of course, my son is doing another business in Nainital. There's a cafe there, which is doing very okay, good. Okay. So a business with high fixed cost will have a higher beta or a low beta. A company which has a high fixed cost compared to variable cost will have high beta or low beta. High beta or low beta. High beta इसको पता है आपको feel करना है. अच्छा, you are confused. So the companies which have high fixed cost will be more riskier, okay, and they can have ups and downs in the results. That's why it's riskier and the beta will go up. Okay, fine. So here the beta has gone up to 1.83 because of what? Because of what? Why the beta has gone to 1.83? From the unlevered beta was how much? 1.106. Okay. Right? Is it clear? So now we have calculated the beta. Okay. Now we have to calculate the cost of equity using the CAPM model. Okay. So we know that the market return is 8%. Okay. Fine. Whereas market return is 11% and RF is 8%. Risk-free rate is how much? 8%. Okay. So tell me, what is the current risk-free rate in India? If I ask you this question, what do you do? Where will you go? At what? 10-year government bond, which is currently trading at 6.7%. आज कल शाम को 6.7 था. आज से 6 महीने पहले 6.5. So the 10-year bond, the yield is 6.7, right? And the government has actually, reduced the repo rate in the last 3 or 4 occasions. It's the lowest, 5.25 now, but the yields are picking up now. Okay, because we had a very low inflation scenario over the last few years. Now, since the metals and other things are picking up, so the yields are telling you the story that the rate of interest is going to go up. Maybe the RBI is not going to announce further rate cut. Okay, fine. So it's about 6.7%. Okay, so here the risk-free rate is 8%. Okay, so 8% plus 1.83. 1.83 is what? Beta. Into RM minus RF, which is 3%. Okay. Now RM is 11%. RM is 11%. That is the return of the market. Right? So if I ask you to find out what is the return of Indian market at the moment. So क्या देखोगे आप? How are you going to find out the return of the market? In a very simple manner. I mean, not the most accurate and best method, but which is the method you look at. The Sensex or the Nifty or the BSE 500 index return, okay, over the last 10-15 years, which is around close to about 30%. Okay, fine, 30-40%. So that will become your market return. Average return, earned in Indian market over the last 10-15 years. Because equity is always a long-term story. We don't look at the last year return and calculate the RM, the risk, the rate of return in the last 10-15 years of say Nifty, which is about close to about 11-12%. Last year it grew by 10%. So we can assume around 10-11% as RM. So here, what is the RM? 11%. So then we have the levered beta is 1.83. So we multiplied with the MRP, we got the cost of equity as 13.49. Is that clear? 39.49%. The cost of equity. Is that clear? So this is using the CAPM model. Okay. Now, there are a lot of flaws in the CAPM model because there are a lot of assumptions which oversimplifies the calculation of the cost of equity. Fine. Because there is one number called beta which determines the risk of the business. Okay. So all risk is captured in one kind of a statistical measure, which itself is a really simplified way of looking at the businesses. Okay. But we're not going to that. So there are another methods that have come in the world, which is called, where they have come, but because of their complexity involved, they're not being so often used. People understand capital and they still feel very comfortable using the capital model. But it gives you a fair idea. Okay. Right. You can always make some adjustment yourself based on whatever your knowledge is and modify the cost of equity. Okay. So we are not modifying it. We are saying the cost of equity is 13.4. The cost of debt 9% because they can raise the cost of debt at 9%. And the tax is 20%. So that means after tax cost will be 7.20. So why do we, do 1 minus t? Anybody?
They're not paying tax on the debt.
No, not paying tax. No, the debt interest is tax deductible. Interest is an expense. The company is get a deduction of its interest before paying tax. So that means the business profit is calculated, PBT is calculated after reducing the interest. Okay, fine. That's right. The interest is tax deductible. Whereas the dividends are the tax deductible, correct?
No.
Why? Give me one line answer. Why? In a very simple manner.
Because
Interest is an expense. What's your gain?
because
It's paid after the tax is
So
paid.
one word will be it's an appropriation of profit. Remember that line. The dividend is nothing but distribution of profit among the partners or the shareholders. Okay. After you have earned money, you are dividing it. Okay. So income tax says that on division we don't give you any benefit. Okay? It is only external we give you the. It is what appropriation of profit. So it is called what? It is an appropriation of profit and not an expense. So that should be your one line answer. अगर आपने ये बोल दिया तो all stories are closed. Okay, fine. So how much is that coming here? 10.66. Okay. So now we go to the question. After we have calculated the WACC, now we forecast the free cash flows. Okay. So we go at the top here. Go at the top. Now the visitor volume is given 20,000 per day. These are the visitors will be coming to the park, and 70% will be the capacity utilization and 360 days. So which will throw out a figure of 50,40,000 visitors per year. Is that okay? Fine. So now this is, first we are going to calculate the revenue in the year 0. Now the ticket price is how much? 220. Okay. Multiply this by 50,40,000, we get this. Divide by 1 crore, we get 110.88 crore Nepalese crore as revenue. On the money collected from the visitors. How much? 110.88 crores. Is that okay? Which is 50,40,000 multiplied by 220. Okay. And then we have actually divided by 1 crore to calculate the figures in crores. Okay. So which is 110.88. Is that okay? Then food and beverages. So food and beverages was how much? 150 and 20% was the margin. So that means 30 rupees will be the profit multiplied by the number of visitors. So we get this figure. So we'll have 15 crore, 15.12 crores as revenue coming from food and beverages. Is that okay? Then we have fancy gifts. The fancy gift is 50 bucks. 50% is the profit. So 25 rupees will be the profit multiplied by the number of visitors and making it in crores. So it will be 12.6 crores. So my total revenue will be in the year 0, 138.6 crores. Okay. Now year 1, it will go up by 5%. Year 2, it will go up by 5% because inflation is inching up by 5%. So you can just go to the formula and check 5% I put there. Okay. So I've made it this thing so that we can calculate that. Okay. So now the project starts from year 2. Year 0 and 1, no business. Year 2, the business starts. Okay. We can just go to the question and see. We will just go to the question. It will start from year 2. Okay. Now, so let's go down and total revenue. Just go to the row number 51 straight away. Rest are the calculations which I have already done. Okay. You can just revisit them. So 152 and say go up. So year 2 figure I have taken here. Okay. Go to the question and tell me why we have taken year 2 as a starting point. Is there any clarity given there that the business will start from year 2? Okay. Just have that clarity. Okay. Then okay, just we'll come back to this thing and then again we'll look at the clarity. We'll go to the question why we've taken year 2. So we just keep it pending if you are not able to find that. Okay. Then second year 160 crores, then 168 crores, 176 crores. Is that okay? So the 5 years revenue is given. 1, 2, 3, 4 years. 4 year the project will be there. Okay, fine. Then annual staffing cost. Annual staffing cost is how much? 65 crores in given the question. You look at the right hand side, 65 crores. Okay, then this will keep going by 5%. This will also, because the inflation is 5%. So what I have done is I have made it 5%. Okay. So year 2 number will get populated here. 71. Okay. Okay. And then copy paste all the numbers, it will come here. Then we have the annual insurance cost. Annual insurance cost is given as 5 crores initially, and then it goes by, I believe, by the same 5%. Okay. 5%. Okay. So then I picked up the 5.51 number from here, and then for 4 years I put the number. Is that okay? It's simple. Now we are coming to the end of the question. Okay. Then we are the other running and maintenance cost, which is given as 25 crores, and it will keep growing by 4 crores. This is given the question. Here we are not applying 5%, we are adding 4 crores every year. Okay, fine. So 25, 29, then add 4, 33, add 4, 37. Okay. So in the question, in the set, you can look at 25, then 4 crores, which is given the question, we are adding that. Okay. Then we have the depreciation. Now depreciation may we'll go to the depreciation schedule. Go to the depreciation. Opening balance is 200 crores. So the asset is 250 crores, but as per the Nepal government policy, only 200 crores can be depreciated. So first year, the depreciation is going to be 40 crores. Okay. And then, then 32 crores, 26 crores, and 20 crores, 20% depreciation. Okay. Fine. So closing balance is there. So the depreciation going to be 40 crores first year, second year 32 crores, 26 crores, and 4. Now here, when we'll use the asset, we are going to depreciate. Okay, it will be straight away, we'll be taking 40 crores here. 40 crores, 32 crores, 25 crores, and 20. So again, it is linked to that depreciation schedule. Okay. Yeah. Then the total expenses, which is basically your annual staffing cost, annual insurance cost, other running and maintenance cost, and depreciation. So we added everything. It comes to 142 crores in the first year, 142 in the second year, and 143 in the third year, and fourth year 146. Okay, fine. Okay, so depreciation is coming down. That's why it is again almost maintaining the same. Okay, 142 to 142. I was thinking why the cost is not going, because depreciation is pulling down the total cost. So then we have the PBT, that is the revenue minus the cost. Okay, which is this. Okay, the revenue minus the cost. Okay, so we have the PBT. Then the tax on profit, so which is 20% tax in Nepal. I have put 20 here, so I have calculated 20% here for each year. Is that okay? 20%. Okay. Then the net profit. The net profit has been calculated. Okay. Then we are going to calculate. We are going to convert this into a cash flow. So we are going to add 40 crores of depreciation, because depreciation is not an expense, is not a cash consuming expense. So we are going to add to for calculating the cash flow. Then 225. What is the project cost? 450 crores. They are going to spend in the first year, 0 year, and in the 1 year. So I have broken into two. एक साल के beginning में, एक साल के end में. So this will be shown two separate lines. Okay. Then the working capital. How much working capital the company is going to spend? 65 crores. So working capital required will be 65 crores. And this also goes up by 5%, because there is an inflation taking place at the rate of 5%. So the working capital will also go up by 5%. So only the net incremental in working capital has to be considered, not the total working capital. We are not making a balance sheet, we are making a cash flow. Okay. Somebody asked me this question, that why we are not taken the full working capital, because it is only the increase which will mean the outflow from the company. Okay. Then in the final year, we are adding all this money as an inflow to the company. जो जितना वर्किंग कैपिटल लगा था आखिरी साल में, वो सारा पैसा हम वापस दिखा देंगे, there is a cash in. Okay. Right? So when I asked this question in the last class or in this class, People said, हाँ समझ में आ गया, but they couldn't answer me. So, Saksha, why we are adding working capital right at the end? All the money which has been deployed and being used as a working capital, which has been we are considering as an expense, as an outflow, not an expense. But many of them have हमने वापस डाल दिया. Cash in flow गया. Why? Not you. Saksha. Anybody who does? Okay. See, I am asking this question to all of you. जिसको नहीं पता, please raise your hand. जिसको नहीं पता, please don't feel shy. अगर मैं पूछा और आपने नहीं बताया तो 10 मिनट जीरो मार्क्स. आपको नहीं पता, ठीक है. वेरी सक्षम बोलिए. आपको किधर? फाइन. दैट्स गुड. जब मैं लंबी भी तब आपको बोला हाँ. जीरो देंगे बात. आपको पता है? पता है? पता है कि बोला नहीं पता तो आपने हाथ में नहीं करे. जीरो मार्क्स. Okay. So don't miss because this is going to be your exam. आपके एग्जाम का क्वेश्चन है जो आपको बता और आपको एग्जाम में करना है. अगर आप मिस करोगे तो कैसे चलेगा? Okay. So working capital is what? They are current assets. Current assets minus current liability. Isn't it? It's an asset, net current assets. Because if it is positive number, it is net current assets. Net current assets. Okay. So that means your current assets are more than the current liability. So some part of your current assets are getting financed by inflation. So why we do net current assets, which is current assets minus current liability? Why we do that? Anybody who can just raise their hand. Why we do current assets minus current liabilities? So I'm just putting the number here. Current assets. Now current assets. Give me some examples of current asset. 2 examples. After
Cash
inventories
and cash.
Trade receivables.
Trade receivables.
and receivables. And you can put cash अगर थोड़ा बहुत requirement है तो आपका हमेशा फंसा रहेगा. But these are the 2 main items: inventory and receivables. Now inventory can be, like raw materials, spares. If it's a manufacturing company or whatever, then it can be finished goods. But before that, there will be work in progress also. The goods which are under manufacturing, okay, which are in the shop floor, which are not being fully converted into finished goods. All kinds of inventories, starting right from the raw material till the end of the, if it's a company which is producing goods. So this will be all the items, major items. These are even your fuel, if you are using diesel, then you are maintaining some inventory for running your BT sets or whatever. So all are your inventory. Okay. You have to keep this into your business to make your business operational. अगर ये नहीं होगा तो आपका business चलेगा ही नहीं. Don't think that you buy machine and it will produce a finished product. It is not going to produce a finished product. So you need some amount of working capital. Your money will be right up into working capital. Okay. Now, suppose all this and your receivables, that means your customers, you're going to give them a credit for 30 days, 60 days, 90 days, whatever. Okay. So there is something called order to cash. So the moment you receive an order, you produce the goods, send the goods to your customers, and they give you. So this is a cycle, order to cash. ये जितना बड़ा cycle होगा, that means more working capital is being deployed by the company. The more the period, it can be say 90 days, it can be say 10 days, it can be 90 days, or it can be 120 days, or can be 200 days. The company which has the least working capital number of days is actually using least working capital. Okay? Because if you need working capital, you have to go to the bank. Either you go to the bank or use your own profits to fund your working capital. आपके 2 विकल्प होते हैं. एक तो आप बैंक के पास जाओ और बोलो मुझे वर्किंग कैपिटल का लोन चाहिए. They'll say okay. As you have gone to the bank and taken a fixed capital loan, you go to the bank to finance your working capital. Okay, fine. So working capital जितना ज्यादा लंबा पीरियड होगा ऑर्डर टू कैश, उतना ज्यादा आपको पैसा आपका बिजनेस में बढ़ा देगा. Okay. I'll just give you an example here. Go to your अभी मत जाना screener पे जाते and then you can go to each and every company and look at the order to cash position of all the companies. It's all given in your. Abhi, just don't open the screener. Let me just open and go to there and then you can join me. For example, let's say Reliance. Fine. And go to the ratios. Okay. So every company will have this chart. The debtor days, inventory days, days payable, cash conversion cycle. So they are maintaining 16 days of debtor. That's what they have roughly 16 days of receivable. All the time they're giving you almost like 15 to 16 days per month. And look at the starting, it was 8, it is now gone to 6. That means they're giving more credit to the customers now. What they were giving about 10 years back. Is it good or bad? It's bad. It can be bad also. It can be good also. Good because if they give more credit, more and more sales will take. It's good in that. But sometimes, if you, as an auditor, chartered accountant, we used to always look at whether your number of days are going up because your customers are not paying in time, or whether you have increased the receivable time. अगर receivable time बढ़ा दिया because of the business need or because of the industry, requirement, because others are giving, you have to also give more credit to your customer. तो ठीक है. अगर आप एक कस्टमर ज्यादा टाइम ले रहे हैं पेमेंट करने के लिए, so that means the chances of generating more bad debts have arisen and more loss to the firm. While doing an audit, we used to look this as a first thing. To make our audit program, we'll say that the receivable number of days have doubled. So please check whether you are giving more credit to the customers or because your customers are paying less and taking more time to pay. Okay, fine. So it will give you an idea about how the company progress. Now it is taking 16 days to convert your order to cash more from 8 days. Second, inventory days. Inventory days have also gone. You are keeping more and more inventory now. Okay, fine. अब sales बढ़ेगी तो inventory की जरूरत पड़ेगी. Is it going because of the sales are increasing? If it is commensurate with the amount of volume of activity, then it's fine. Okay. But if your inventory is going, then as an auditor will say age-wise inventory is raw material की, spares की, finished goods की और भाई देखें कि कितनी inventory पुरानी होती जा रही है. Okay, fine. I'm going to ask questions. क्या नाम है? हाँ? Bhumi. So Bhumi, the question is that the inventory days are going up. What are the reasons why the inventory days will go up of a business? Is it good or bad? Why it is good? Why it is bad? Can you answer this question?
It's bad because the inventory, optimum utilization of inventory is not happening.
Okay, so in case, now of course, it is bad if you find that you are maintaining more inventory, your sales volumes are not gone up. No. आपका business तो बढ़ा नहीं, आपकी inventory बढ़ गई. Then it is bad.
Yes.
Don't say it is a bad in isolation. If your business is not growing and your inventory is growing, so it's good, not good. Okay. The second thing, as a auditor, you look at is whether you are maintaining inventory. The inventory is just stuck up in the business. क्या आपने खरीद के रखी है और इन्वेंट्री आप यूज ही नहीं कर रहे हो, वो ऑब्सोलीट हो चुकी है, वो आपकी इन्वेंट्री में आएगा, उसका आपने प्रोविजन नहीं करा, उसको एक्सपेंस कराई, तो यू आर ओवर रिपोर्टिंग योर प्रॉफिट. ओके, सो एज एन ऑडिटर दैट अलार्म बेल विल कम कि भाई चेक करो इन्वेंट्री जो है रीडिंग एनालिसिस कि क्या 6 months एंड अबव की इन्वेंट्री कितनी थी और कितनी अगर बढ़ रही है तो इट्स एन अलार्म. So then we can go and qualify the balance sheet of the company and say that the company is not doing proper business. Is that okay? And it's taking more time to convert from order to cash. Is that okay? Now, company where I was working, again an example, I worked in a company called SI. Did I tell you that? Last time बताया था मैंने, क्या बताया था? कि कंपनी का शेयर प्राइस में आपको बताया? नहीं बताया शेयर प्राइस से बढ़ता है सर. Okay, just before that, there's a company called SI. किसी doesn't बताया. Now, coming back to this receivables. So this is an inventory. So we used to have a meeting. We have to bring down the inventory. We have to bring down the working capital. We have to make the net working capital to 0. The idea was net working capital should be equal to 0. So that no money is, tied up into receivables. If it's tied up, then we should have current liabilities to take up. So all your current assets should be financed through current liabilities. Okay, because we are also buying goods from your suppliers, so we should get credit for them, and it should virtually become zero. So that was the target given to the company, and that led the share price. Apart from so many things, apart from this was one small thing. He said we are going to control the cost of our business, and we are going to become the lowest cost producer in the world of the product that we are manufacturing, and become the lowest cost in the world. सबसे वर्ल्ड में सबसे cheapest वो सामान हमारे ही बनता है अभी भी, and we got a Deming prize, which is a prize which is given to the top company who is actually worked on that cost. So he said one slogan he gave on that day: meet the quality and beat on quality. So this was one line. Apart from so many things, he said, we will meet the quality. We will become the best quality in the world and meet it. We will not do quotes. अगर कोई आदमी हमसे ऊपर नहीं बना रहा, हम उसके साथ मैच करें. But cost में, we are going to be the lowest cost producer. So this slogan we have given, and it says that we are going to meet the quality. So we were a Six Sigma company, from a 4 Sigma, from a 2 Sigma to 4, and then to 6 Sigma. 6 Sigma means the least amount of scrap or waste. Okay, like 4 items of waste per 10 lakh items being produced. If you achieve that, then you are 6 Sigma. Okay, so he said that we are going to achieve all that, and we achieve all that, and became the lowest cost producer in the world. Okay, now coming back to the net working capital. Now inventory is nothing but the money which is tied up into your business. Okay, no company wants to tie up money into working capital. There's a philosophy called just in time. If you follow just in time, if you can get the goods in your factory, consume it, raw materials, and produce and sell, that means you're not keeping any raw material stock in your business. So that is a Japanese technology. I mean, jargon, where it's just in time. Japanese called inventory as mura. Mura means waste. It's just a waste of things and another kind of capital. So the working capital takes your money. But when the project is over, all that money comes back to you because they're assets. They are your receivables, they are inventories, you're going to sell them off, and it is going to give you a cash inflow. So, Akriti, so you have not followed it now. I've given a long story. So the working capital, that means inventory receivables which you have deployed in the business, when you close your business, now those assets, current assets will not go into thin air. They will come back to you. They're going to realize in cash. What you do? You will not buy more raw material. So whatever your raw material you have, you will use it for your production and finish it off. Your receivables are going to pay off. You're not going to sell further on credit. So ultimately, you're winding a business the whole year. So your working capital is going to come back to your business as cash. Is that okay? Right? अभी टाइम ऑफ बचा अभी है हाँ 5 मिनट चलो 5 मिनट ही बचे इस क्लास तो 5 मिनट बचे तो अटेंडेंस है फिर बाद में करें so you can look at this chart for all the companies. Okay,
Aditya presents Akshan,